Eric Mwatha with Mwatha.com, going into March 21st and March 22nd, 2015. Let's take a look at the market action on Friday. We see that the Dow was up about 1%. The Nasdaq was up 0.68%. We see that S&P 500 was up 0.90%. Gold was up 1%. And crude oil was up 2.2%. We also see that the VIX was down about 7.5%. For the week, the S&P 500 was up 2.66%. For the week, we see that the Nasdaq was up the most, 3.17%. And we see for the week that the Dow was up 2.13%. So let's go straight to the charts. We see that the Nasdaq was successful in closing at fresh weekly closing highs. As we can see now, the breakout level is this new previous weekly closing high of 4963.53. So the breakout is in play. This opens the possibility for higher prices, even above March 2000 intraday highs. So as long as the Nasdaq is holding above this level, and as long as the weekly chart is breaking out, we have to respect the potential for upside. Based on where we closed on Friday, we can see that the RSI has come back to this line where it's been stalling lately. Every time the market has come to this level over the last couple of weeks, it's pulled back slightly. So we'll see whether this is the same thing that's going to take place, because we see that we close exactly on the line, which has been resistance on the weekly time frame. Now if we take a look at the Nasdaq daily, we can see that we also closed, of course, at fresh daily closing highs above the prior daily closing high of 5,008.10. So as long as the Nasdaq is above that level, this market could continue trading higher. Obviously, if we slide and trade below that line, which is, let's call it about 5,008, if we close below that and start trending lower, that could suggest that the market is running out of momentum. We also can look back now and see that this move from here to these highs began when the RSI came back to this line and held, and also it happened to be at the same level where the recent lows on the daily for the Nasdaq were also finding support. So this most recent move to new highs began when we found support here on those two lines, and since then you can see that the market has moved to new highs. We also see that the Nasdaq managed to move its daily RSI below 50 and back above 50 with uniform activity, which is a sign of strength. If we take a look at the Nasdaq hourly, we can see that the RSI continues being strong, and here we are using the period of RSI 14. So RSI 14, and we can see that the RSI continues trading above 69.10. So if it can continue holding above that 69.10 threshold, that would suggest that this market is still on an hour-to-hour basis looking very strong. So the key is if the market can hold on the hourly for the Nasdaq short term above 69.10, there still could be some more upside. Let's take a look at the Dow weekly. And we can see that on the Dow weekly, we did attempt to move above the prior weekly closing highs and failed. So the Dow needed to be above 18,140.44. We were slightly above that on Friday, but did not close above that. So the the Dow has yet to break out. As of right now, we are looking at a failed to breakout attempt. Of course, it can try to do so in the coming weeks or probably in the new week, but we see that on the RSI, we are now trading within a very narrow wedge. So if the market can decide which way it wants to go above this hourly wedge, the market is bullish and the Dow could actually break out successfully. Otherwise, if we find resistance on that line and eventually break below the wedge, maybe the suggestion is that the market is going to be trending lower. In conclusion, as far as the Dow is concerned, if it can hold above 18140.44, that's going to be a fresh breakout. Otherwise, now that we are stalling and haven't closed above this level, the more we move away from this breakout attempt and confirm that it has failed, the more we might be looking at a pullback of some sorts. If we take a look at the Dow hourly, what we see is another layer of potential resistance. If you take the top side of the hourly RSI, and here we are using a period of 26, just draw a simple straight line connecting the tops. You'll see at the highs of the day on Friday, the market hit that level and seemed to have pushed back after hitting that level. We also see that happens to be a back test line here. And so the last time the market did break below this line here, we had this pullback since breaking below the line. So you got this downward action here. And now this has become backtest resistance. If the market continues showing those two lines as resistance, the hourly is predicting that hour to hour, the market should also be pulling back. If we take a look at the Dow 30-minute chart, you can see that there is a trend line break that took place here, beginning of March. So this break point on that trend line. So again, we are drawing this trend line here. Once that broke, we see that the market did see a little bit of a pullback here. And so we take that break point, and this is where the market came late Friday, hit that level and seemed to have coiled back over the last 1.5 hours of the trading session. So looks like the market came back to this break point and is stalling. So clearly, the more we move away from this level, the more we are poised to go lower. If the market wants to record new highs, it has to take back and move above that line of resistance. So right now we are looking at resistance on the 30-minute chart. If the market can move above that, then that's easy to tell at the point when it does, if the market does eventually move above that line, that traders do need to be poised on the long side. Right now it looks like hour to hour, this is more than likely resistance. If we take a look at the Dow Transports daily, if we take the highs and connect them like that, you can see the market has come back to a level of resistance. If the market can climb above that resistance line, that's going to be very bullish. Otherwise, if this turns into resistance and the market is unable to do so, then we might be looking at eventually the market starting to pull back if that resistance is not broken. So it's a very easily identifiable area on the market. Above that line of resistance, the market is bullish, and below that line of resistance, the market does pull back. Also, on the RSI, we see that this is a level of resistance here, and the market has been coming back on this daily chart and showing resistance at that level and pulling back on the Dow Transports. All these levels here, I've seen some type of pullback in the market that lasted a couple of weeks, a couple of days, and you can also see here recently the market hit that price range and also this RSI reversal area. So the fact that we are back to that general area here, the more we show resistance, the more the market is suggesting we are due for a pullback. This can also be seen on the Dow Transports hourly. As you can see here, the line connecting the price top side there, above that line the market is bullish. If it's confirmed as resistance, market pulls back short term. We also see that the RSI hourly has come back to this line here. So we can see that we need to break out above this resistance line on the Dow Transports if it's gonna start trading well. needs to be above that line for it to move higher. Otherwise, if it can't move above that line and stalls like it is doing right now at the close of Friday's session, suggestion there would be that the market wants to go down. So that's a clearly defined line of resistance. Above that, markets are bullish. Below that, we see that the market could be pulling back. If we take a look at the S&P 500 weekly, S&P 500 did attempt to move above the previous weekly closing high of 2110.30, but did not close above that. So let me repeat that. Failed to close above the prior weekly closing highs. That could be a problem, but the market can also have another chance eventually down the road, maybe next week, maybe the next couple of weeks, of breaking out. And if it can break out successfully, great. The bulls are in control. If it cannot close above that 2110 level, then the market is not as strong and could be pulling back. We also see a line of resistance, if you draw it like that, similar to that we've seen on the Dow and on the Nasdaq. So it needs to be above this declining RSI line if it wants to continue recording new highs. Otherwise, this might become a problem. It might be a reason why the market could actually eventually end up pulling back. Let's take a look at the Canadian market, and we can see that it had a nice couple of days here ever since it made these lows, and those lows were made when it came back and hit this support line on the daily RSI. So this line held. Since then, we've seen a couple of days to the upside, but I think it's a almost tough market to predict because we are trading exactly around the 50-day moving average and the 200-day moving average. So the market seems to be almost in a sideways action. I think you can draw a simple wedge connecting the tops like that, and also connecting the lows or the daily closing lows, and you see a nice defined wedge. So above that wedge, the market should be poised to go higher short term, and below this wedge, the market should be poised to go down short term. So I think that's how I would look at this one. It's pretty much trading around the moving averages, almost tough to predict which way it wants to go. So we can draw a wedge. Above the wedge, market is bullish. Below the wedge, Canadian market pulls back. But I think as of Friday's action, it looks like it's leaning towards resistance and probably a pullback, because on the hourly, we have a declining RSI line showing resistance here, and that looks like it is a double top on a short-term basis. Right there. And also you can see this is period of 26. It also happens to be a backtest failure level there. So that double top is resistance on the top side and also backtest resistance. Indication here is that if the market cannot move above those two lines, more than likely hour to hour, Canadian market is also poised to be going lower based on those two lines showing resistance. Of course, if you're a bull, you'd like the market to move and trade above those two lines of resistance on the hourly. Right now, Friday's close suggests that Canadian market, if I was to take one side, would be hour to hour, maybe day to day, set to pull back also. Let's take a look at Apple, and we can see here that the breakout level, if it's going to move higher, is the prior weekly closing high, and that is at 129. So 129, 0.50. So if the stock can move above that price range on a weekly time frame, that would be a fresh breakout. If you're looking for a swing trade, that is what would trigger a buy signal, just like it triggered a buy signal during this breakout here, as an example there, and also another breakout that eventually was successful here. So that's the same idea. not all breakouts are going to be successful, but if you want to own a swing trade with the potential of an upside, then you can set an alert for when Apple moves above 129.50, because that would indicate that maybe it's looking to record fresh highs. One thing to note here is that on the monthly, the stock continues looking strong because the monthly RSI is trading above 69.10 and actually has been trading above 69.10 for quite a while. So that would be what I would be looking for here for strength. As long as the RSI is trading above 69.10, Apple continues to trade well. It's only when it moves back below 69.10 that we might start looking at this as a potential pullback candidate. Take a look at this most recent drop here off these highs coming down here. This began when it moved back below 69.10 also. So now that it's above that price range, we have to give it the benefit of the doubt that it continues recording higher prices. Just a quick reminder on the VIX. I think the VIX was one of the first indications that the market was due to move higher, because we had seen that the VIX had come back to declining line of resistance a couple of weeks ago, and we started suspecting that the market would be moving higher when the VIX was trading there. It also came back to previous breakpoint. So that breakpoint, draw it like that. We had seen that it had come back to those two lines, and so looking back, that was a nice call that once we saw this resistance on the VIX, since then the market has traded well. We can also see the same type of resistance on the hourly. If you recall, when the VIX was trying to move and the market was a little bit shaky, the VIX had come back to this level, and we were suspecting that if the VIX fails to hold, which it did, that the market would be a buy at that point. So when the VIX was trading here and it came back to this RSI resistance level where it's been stalling, the indication there that the VIX was going to be pulling back, market was going to be a buy. That was correct, and the reason why we were thinking that is you can see that the VIX has been a good indication of when the market was going to start coming back from a pullback. Even these highs on the VIX, the market stalled precisely on that level, and also these highs here. So it's good that once in a while when the VIX is moving higher, we take a look at what the VIX is doing, because over the last 1 or 2 years, it's been a very good indicator of when the market was going to be pulling, or at least trying to rebound after a short pullback. So right now, I think the VIX, in my opinion, is in no man's land, but just wanted to show you that when we had come back here, when the market was a little bit pulling down, the VIX did tell us that the market was actually more than likely going to moving higher. And if you positioned yourself correctly, at least you would have not been too surprised by the recent upward move in the markets. Let's conclude by taking a look at the S&P 500. And we can see here that the S&P 500 continues trading above 69.10. Now this is sign of strength. It's been holding above that threshold, as I keep reminding all of us that it's been trading above that threshold since March of 2013. As long as it is doing that, as long as the monthly is showing breakout, which it's doing right now, S&P 500 and the general market should be continuing to trade very well. If we take a look at the Nasdaq on a monthly chart, we can also see that here's another evidence of strength. You can see that the Nasdaq continues holding its monthly RSI above 69.10. It's been doing that since June of 2013. So this bull market continues grinding higher. You can see we came here and did eventually break out above that prior monthly closing high, and now we are working on month number 2 of the current breakout. If you take a look at the Dow, we can see that the Dow is also back above 69.10 here, trading very well above 69.10 on the monthly, and we can see that the monthly breakout continues to be in play, which is successful move above the prior monthly closing high. So all markets, the major markets, are trading above 69.10. Such is the case, then we have to conclude that the market should continue to trade well for now. It's only when the market moves back below 69.10 that we might start looking at this market as being suspect. For now, the market is strong, continues to be strong. Pullbacks are pullbacks. It's only when we break down on the monthlies that we can start looking for strong sell signals in the general markets. Eric Moore, good luck, peace, and blessings. Whoa.